Indeed. Well, we have a housing sector health check this morning with single-family housing starts for March coming in 2.7% above revised February numbers. Building permits also out this morning, falling sharply in March. For more on the state of the housing market, we're joined by Moody's economist Matthew Walsh. Matthew, thank you for joining me. So this week, we're obviously getting at least a sense of the tone of what's happening in the housing market at the moment. What are your biggest takeaways from the data we have so far?
Yeah, thank you for having me. It's great to be here. I think the biggest takeaway right now is that, we're at a bit of an inflection point in the housing market. The construction data is always a bit noisy, but the trend is undoubtedly clear right now. We're seeing that, home building has stabilized. That began late last year, and we're definitely seeing that in the data. There are a few other things I think I just want to call out. I mean, the big thing is that February's data was revised lower. This was a seasonably warm winter, and that has largely affected the seasonal adjustment process. So, as expected, we saw February's data revised a bit lower, and it's definitely important to take this data with a grain of salt.
And so overall, we're still monitoring very closely where median prices are coming in at. Matt, what does that signal to you about where the broader housing market stands, given some of the recent notches lower or declines that we've seen on those average home prices?
Yeah, I think, we saw home prices come in a bit. They definitely are falling a bit slower than we saw the first half of last year, or the middle half of last year. The declines are largely due to affordability, which is still a really big problem in the housing market. With mortgage rates coming in slightly from where they were in October, they peaked just north of 7%. That has helped improve some of the affordability issues and brought some buyers back into the market. But just given the rapid pace of appreciation over the past 2 years, home affordability is still a major problem. And one thing that we look at here at Moody's is overvaluation, which is a great signal for where home prices will continue, where home prices can fall, and to the extent of which they'll fall over the next year. And while overvaluation is coming in a bit as median home prices fall, they're still very high relative to their historical values.
And so then how can we expect this to decline at some point? Obviously, you have rising interest rates. So if you're already an existing homeowner, you're not going to want to sell and have to take on higher interest rates. At what point will we see perhaps a sharper decline in some of these house prices, given the inventory is still so tight?
Yeah, that's a great question. I mean, for one, I think we're not expecting really sharp decreases. Certainly what we're going to see is nothing like what we saw in the last house price correction. We should see, a much slower decline than what we saw before, and even slower than what we saw in the first bit of this house price correction. We're expecting prices to come in about 5 to 10%, depending on the index that you look at over the next 2 years. One thing I think is important to note is, we're entering that spring home buying season. And while inventories are low right now, we should start to see inventories creep up as a lot more people decide to make the move. I don't think we don't plan to see any large increase in inventory. People are locked into those ultra low interest rates. But as more people decide to make the move, I think we can expect some increase in inventory levels over the course of the spring.
If we continue to have an affordability problem, how much does that continue to also trickle into the rent scenario and the calculus around where rent prices continue to moderate, especially in major metropolitan cities?
Yeah, that's another great question. I think, it's important to kind of break out the difference between the multifamily side and the single family side. While we still see, the single family side, particularly constricted in terms of availability of homes and availability of rentals, we're going to see this pretty significant increase in multifamily completions over the next year. Right now we have a record number of units that are under construction, and multifamily compose a significant share of that. And as those units come online, we should start to see some of the high rents that we witnessed over the past 2 years come in quickly. I know recent data is showing some declines on rentals for the first time in quite a while, and that's on a year-over-year level. So, we are starting to see those rents decline a bit, and obviously that has major implications for the inflation picture.
All right.
And Matthew, we have these home improvement stocks that are up there at the moment. A lot of people, when COVID first hit and they realized they weren't going to move, started doing a lot of home improvement. We did start to see that taper off. There's only so much improvement that you're going to do in your house over a certain period of time. What are your expectations there, and how much spending you think consumers are still willing to do on home improvement?
Yeah, that's one thing that we're keeping a close eye on here. I think as the housing stock gets older, we'll definitely see a lot of spending on home improvement. You have a lot of people who are kind of stuck in place right now just because there are not so many homes available, and people are locked into these low rates. So they are choosing to invest in their own home because they're in a way forced to stay there. So they're taking some of that money that they would spend on a down payment that they maybe can no longer afford and invest in their current property and spend on renovations or remodeling or things like that.
Matt, the only improvements I can make right now to my apartment are in the air quality, so I just keep buying more plants. Moody's economist Matthew Walsh, thanks so much for taking the time here with us today. Appreciate it.
Great. Thanks for having me. Thank you.